AST SpaceMobile's ambitious satellite constellation launch by 2025, a comprehensive overview. Introduction. On February 9, 2025, AST SpaceMobile announced its strategic plan to launch 20 private satellite constellations by 2025, marking a significant milestone in the quest for global mobile connectivity. With an investment of approximately $500 million allocated across research and development, R&D, manufacturing and deployment, AST SpaceMobile aims to revolutionize telecommunications by transforming existing smartphones into satellite phones. This initiative addresses the connectivity gap that affects approximately 3.2 billion people currently offline. 1. Investment trends in the space sector. The North American space sector has witnessed remarkable growth in venture capital investment, particularly due to a dramatic reduction in launch costs. The price of launching payloads into low Earth orbit (LEO) has decreased significantly, creating a favorable environment for startups such as AST SpaceMobile. In 2021, total private investment in space startups reached an unprecedented high of $12 to $15 billion. Although this figure dropped to $8 billion in 2022 due to prevailing macroeconomic factors. 2. Technology and phased launch approach. AST SpaceMobile's strategy involves a phased launch approach with plans to deploy its first 5 satellites, part of the BlueBird series, in late 2023. Commercial services are anticipated to commence by early 2024. This initial phase will focus on providing connectivity to the equatorial region, covering 49 countries with a collective population of 1.6 billion people, of which 700 million currently lack cellular coverage. The overall constellation is expected to expand to 110 satellites, eventually growing to 168 to support 5G connectivity. 3. Market opportunity and business model. The business model for AST SpaceMobile incorporates a 50-50 revenue-sharing agreement with mobile network operators (MNOs), positioning it to achieve high profit margins. The projected market opportunity is estimated to be around $1.1 trillion, with expectations to capture 1% of this market by 2027. This aligns with the rising demand for mobile data, especially in underserved regions such as sub-Saharan Africa. 4. Navigating the regulatory landscape. AST SpaceMobile must navigate a complex regulatory environment, including obtaining necessary licenses from the Federal Communications Commission (FCC) for satellite communications. While the company has garnered support from U.S. senators, potential opposition from existing telecommunications giants like T-Mobile and Verizon introduces challenges. The regulatory landscape's intricacies will be critical in determining the deployment timeline and operational scope. 5. Challenges and risks ahead. Despite successful technological validation through previous test satellites, AST SpaceMobile faces several risks, including execution delays, regulatory hurdles, and intensified competition from emerging players like Lynk and the recently announced T-Mobile Starlink partnership. As new entrants emerge in the market, the competitive landscape could dilute AST's market share, necessitating strategic agility. 6. Timeline of key events. 2017, AST SpaceMobile is founded by CEO Abel Avellan with initial seed funding of $6 million. 2020, the company files for a U.S. market application for its satellite constellation. 2021, AST SpaceMobile goes public through a SPAC merger, raising a total of $588 million in funding. 2022, the BlueWalker 3 test satellite is launched, serving as a crucial validation point for the technology. Late 2023, launch of the first 5 BlueBird satellites, with commercial services expected to start in early 2024. 2024, continued expansion of services and additional satellite launches to enhance coverage. 2025, target to have 20 satellites operational, aiming for comprehensive coverage in the equatorial regions. 7. Insights from various sources. 2 primary sources provide insights into AST SpaceMobile's initiatives. Source 1 emphasizes the operational, technological, and financial aspects of AST SpaceMobile, detailing projected revenues and social impacts of enhanced connectivity. Source 2 offers a broader view of the North American space venture capital landscape, discussing investment trends and key players shaping the industry. Conclusion: AST SpaceMobile stands at a pivotal juncture in the space telecommunications market, with ambitious goals to bridge the digital divide through innovative satellite technology and strategic collaborations. Despite facing potential challenges, the projected growth and investment opportunities position AST SpaceMobile as a significant player in the evolving space economy. The company's commitment to providing mobile connectivity to the unconnected could have profound social and economic implications, underscoring the importance of this endeavor in the coming years. This report provides a comprehensive overview of AST SpaceMobile's plans to launch Satellite Constellations by 2025, highlighting investment trends, technological approaches, market opportunities, regulatory challenges, and competitive dynamics. Counterintuitive information in the content. 1. Investment trends versus market reality. While the content suggests a dramatic increase in venture capital investment in space startups, it notes that this surge peaked in 2021 at $12 to $15 billion and fell to $8 billion in 2022. The counterintuitive aspect here is that despite the growth potential of the space sector, the actual funding has been highly volatile and can be significantly impacted by macroeconomic factors, illustrating that enthusiasm does not always equate to sustained investment. 2. Competitive landscape. The content emphasizes AST SpaceMobile's first-mover advantage in satellite-to-mobile services. However, it also highlights emerging competitors like Lynk and the T-Mobile Starlink partnership, suggesting that the market is not as monopolistic as one might assume. The rapid entry of competitors could dilute AST's market share, countering the narrative of a clear path to dominance. 3. Regulatory hurdles. There's an implication that AST SpaceMobile could easily navigate regulatory landscapes due to support from influential partners like Vodafone. However, the presence of strong opposition from established telecommunications companies and the complexity of the regulatory environment introduce significant risks that could hinder AST's progress, contradicting the notion that favorable partnerships automatically ensure regulatory success. For the cost structure and profitability, the report posits that AST SpaceMobile could achieve profit margins exceeding 90%, which is extraordinarily high for a company of this nature. This projection may lead investors to believe that the business model is almost risk-free, but such high margins are often difficult to sustain over time, especially in competitive markets where price wars can erode profitability. 5. Technological validation. The narrative suggests that successful tests with prototype satellites provide strong evidence of AST's technological capability. However, the actual scalability of the technology remains uncertain, particularly when expanding to a larger constellation. This suggests that initial success does not guarantee future performance, which is a common pitfall in high-tech ventures. 6. Social impact versus financial viability. The report emphasizes the societal benefits of providing connectivity to billions of unconnected individuals, framing AST SpaceMobile as a socioeconomic savior. However, the potential for financial returns may not align with these altruistic goals, as the most underserved markets often have lower purchasing power, complicating the revenue model. 7. Market penetration projections. The expectation of capturing 1% of a $1.1 trillion market by 2027 seems optimistic, especially considering the competitive forces and regulatory challenges. The counterintuitive point is that even with significant market potential, achieving projected subscriber numbers may prove difficult due to market dynamics and competition, which can lead to missed targets and disappointed investors. 8. Impact of SPACs. The content discusses the high-profile failures of SPAC-backed companies post-2021, which contrasts with the optimistic outlook for AST SpaceMobile. This highlights a counterintuitive reality where the excitement of going public through SPACs does not necessarily translate into long-term success and stability for space ventures. 9. Technological risk versus market demand. While there is a strong emphasis on the technological feasibility of AST SpaceMobile's offerings, there is less focus on the actual demand for such services in the targeted markets. This creates a counterintuitive situation where a technically viable product may not find a sufficient customer base, especially in regions with limited purchasing power. 10. Long-term market viability. The report projects a robust growth trajectory for the space economy, yet it acknowledges the cyclical nature of venture capital, which has historically seen both booms and busts. This suggests a counterintuitive understanding that while the long-term outlook for space ventures is promising, the path may be fraught with short-term challenges that could derail even well-funded companies. In the realm of satellite communications, AST SpaceMobile's ambitious plan to launch 20 private satellite constellations by 2025 is poised to be a transformative endeavor, especially regarding global mobile connectivity. While the core aspects of this initiative, investment, technological advancement, market strategy, and regulatory challenges, have been highlighted in various reports, some significant details often escape the attention of the general public or potential investors. Overlooked aspects and their significance. 1. Revenue sharing agreements with MNOs. Many reports note AST's 50-50 revenue sharing model with mobile network operators MNOs, but the implications of this model are often understated. This agreement allows AST to leverage existing infrastructures of MNOs, minimizing customer acquisition costs and risks associated with direct marketing. The significance lies in the fact that by aligning with established players, AST can rapidly scale its subscriber base without the burdensome costs typically associated with new service launches. This strategic partnership could lead to healthier cash flows in the early stages of deployment, providing a cushion against potential operational risks. 2. Technological validation through test satellites. The success of test satellites like BlueWalker 1 and BlueWalker 3 is often presented as a mere technical milestone. However, these validations represent a crucial risk mitigation strategy. They offer insights into real-world performance and provide a platform for iterative improvements before full-scale deployment. The significance here is that achieving positive results from these tests not only enhances investor confidence but also positions AST favorably against competitors who may not have conducted similar rigorous testing. This can create a perception of reliability and technological superiority in a market that is still in its infancy. 3. Regulatory landscape and lobbying power. While the regulatory challenges are frequently acknowledged, the role of lobbying and political support is often underemphasized. AST has garnered support from key U.S. senators, which can be instrumental in navigating complex regulatory environments. This political backing can facilitate smoother pathways for licensing approvals and operational permissions, especially in a sector where regulatory hurdles can significantly delay timelines and increase costs. Furthermore, the potential for changes in regulations that favor satellite communication driven by political advocacy can open up additional markets and revenue streams for AST, enhancing its growth prospects. 4. Market size and growth potential. The projected market opportunity of $1.1 trillion is frequently cited, but the underlying dynamics that contribute to this figure are rarely explored deeply. The increasing demand for mobile data, especially in underserved regions, combined with the projections of smartphone penetration in developing countries, suggests that AST is not merely entering a competitive landscape but is tapping into a rapidly expanding market. The significance of this is twofold. First, it presents a compelling growth narrative for investors, and second, it underscores the societal impact of bringing connectivity to billions, which can resonate with socially conscious investors. 5. Impact on global connectivity and digital divide. The potential of AST SpaceMobile to bridge the digital divide is often mentioned but not contextualized within broader socioeconomic trends. For instance, the ability to provide connectivity to 3.2 billion people currently offline not only represents a market opportunity but also a catalyst for economic growth, education, and healthcare improvements in developing regions. This connection can lead to increased productivity and innovation, creating a cycle of positive feedback that benefits the global economy. The societal implications of this connectivity should not be overlooked, as they may attract investors interested in environmental, social, and governance (ESG) criteria. 6. Competition dynamics. The emergence of competitors like Lynk and the T-Mobile Starlink partnership is mentioned, but the nuances of competition are often oversimplified. AST's strategy of offering services through existing MNOs gives it a unique competitive edge, as rivals may face higher customer acquisition costs and operational challenges. The significance here lies in the strategic positioning of AST as a service provider that can offer greater convenience at lower costs, especially in developing markets where affordability is paramount. 7. Supply chain and manufacturing resilience. Reports typically highlight the technological aspects of satellite deployment but often overlook the importance of supply chain management and manufacturing capabilities. AST's plans to ramp up production to 6 satellites per month in its Texas facility could be a significant factor in maintaining competitive advantage. The resilience of the supply chain, particularly in the context of the ongoing global supply chain disruptions, is critical. AST's ability to manufacture locally could mitigate risks associated with international dependencies and delays, enabling it to respond swiftly to market demands. Conclusion. In conclusion, while AST SpaceMobile's plans for launching 20 private satellite constellations by 2025 are ambitious and certainly newsworthy, the overlooked aspects of their strategy are equally important. The revenue-sharing model with MNOs, the technological validation through test satellites, political lobbying, power market dynamics, societal impact, competitive strategy, and supply chain resilience all contribute to a more comprehensive understanding of the company's potential and the risks involved. Investors should consider these dimensions when evaluating AST SpaceMobile, as they could significantly influence the company's long-term success and market positioning. The content regarding AST SpaceMobile's plan to launch 20 private satellite constellations by 2025 focuses on several key aspects that are crucial for in-depth analysis and discussion. The 4 most valuable points for detailed exploration are: 1. Investment trends and capital dynamics. The North American space sector has experienced a surge in venture capital investments, reaching an all-time high of $12 to $15 billion in 2021, with a notable decline in 2022 due to macroeconomic factors. This trend highlights the impact of reduced launch costs on capital inflows into the space industry. The significant decrease in costs, particularly with the advent of reusable rockets, has catalyzed the emergence of startups like AST SpaceMobile. Understanding these investment dynamics is vital for evaluating the viability and sustainability of new entrants in the space market, especially in light of fluctuating economic conditions. 2. Technology and phased launch strategy. AST SpaceMobile's phased approach to launching its satellite constellations is a strategic move aimed at addressing the connectivity needs of the 3.2 billion people currently offline. The initial deployment of the BlueBird satellites and the subsequent phases demonstrate a well-structured plan to gradually expand service coverage, particularly in critical regions. Analyzing the technological innovations involved in satellite communications and their implications for global connectivity can provide insights into the potential social and economic impacts of satellite-based services. 3. Market opportunity and revenue model. The projected revenue-sharing model with mobile network operators (MNOs) offers a compelling business case for AST SpaceMobile. The anticipated market opportunity, estimated at around $1.1 trillion, underscores the potential profitability of capturing a fraction of this market. A detailed examination of the revenue model, including the implications of partnerships with established MNOs, can shed light on how AST SpaceMobile plans to navigate competition and operational challenges while scaling its services. 4. Regulatory environment and competitive landscape. The regulatory landscape is critical for AST SpaceMobile as it seeks to obtain necessary licenses and navigate objections from existing telecom companies. The support from U.S. senators and the challenges posed by competitors like T-Mobile and Lynk present a complex environment that could significantly influence AST's operational timeline and market entry. A thorough analysis of the regulatory hurdles, potential legislative changes, and competitive strategies will be essential for understanding the risks and opportunities that lie ahead for AST SpaceMobile. These points encapsulate the multifaceted nature of AST SpaceMobile's venture into the satellite communications landscape. Discussing these areas in depth can provide valuable insights into the broader trends shaping the space economy and the implications for global connectivity. Here are 3 famous historical cases that illustrate the complexities and challenges faced in satellite communication and related technologies. 1. Iridium Satellite Constellation. Launched in the late 1990s, Iridium was one of the first attempts to create a global satellite phone network. The project aimed to provide mobile communication across the globe using a constellation of 66 low-Earth orbit LEO satellites. While the technology was innovative, the company faced significant challenges. Iridium declared bankruptcy in 1999, just months after launching its services, primarily due to a lack of demand for satellite phones and the high costs associated with the project. The initial target market was too small, and the competition from terrestrial mobile networks, which were rapidly expanding, made Iridium's services less appealing. After reorganization, Iridium was acquired in 2001, and it has since shifted its focus towards providing critical communications for government and enterprise customers rather than consumer services. 2. Globalstar. Globalstar is another example of a satellite communications system that faced significant hurdles. Launched in the late 1990s, Globalstar aimed to provide satellite phone services similar to Iridium. However, like Iridium, Globalstar struggled with high costs, technical issues, and a limited customer base. The company filed for bankruptcy in 2004 after failing to secure enough subscribers to sustain its operations. While Globalstar has since emerged from bankruptcy and continues to operate, it has had to continually adapt its business model and focus, including expanding into IoT and broadband services to remain relevant in a competitive telecommunications landscape dominated by terrestrial carriers. 3. Teledesic. Founded in the 1990s by Bill Gates and Craig McCaw, Teledesic aimed to create a low Earth orbit satellite constellation that would provide broadband internet access globally. The vision was ambitious, with plans for over 800 satellites to deliver high-speed internet services. However, despite significant investment and initial excitement, the project faced a multitude of challenges, including high costs, regulatory hurdles, and the emergence of competing technologies. By the early 2000s, Teledesic had scaled back its plans significantly and ultimately ceased operations, never launching a functional constellation. The case of Teledesic serves as a reminder of the complexities involved in deploying extensive satellite networks, particularly in terms of financing and market viability. These historical cases underscore the risks and challenges that come with ambitious satellite communication projects, including market demand, technological feasibility, and competition from terrestrial networks. Future outlook. Predictions for AST SpaceMobile and the private satellite constellation market. As of February 2025, AST SpaceMobile's ambitious plan to deploy 20 private satellite constellations by the end of the year is set against a backdrop of significant technological, regulatory, and market dynamics. This analysis outlines key predictions and insights into the future of AST SpaceMobile and the broader satellite communications landscape. 1. Rapid deployment and expansion. AST SpaceMobile is expected to successfully launch its first 5 BlueBird satellites by late 2023, with commercial services aimed to commence in early 2024. Following this initial phase, the company plans to roll out an additional 15 satellites, achieving a total of 20 operational satellites in the equatorial region by 2025. This phased approach is essential for mitigating risks associated with satellite deployment, allowing for adjustments based on early operational feedback. By 2027, AST SpaceMobile aims to have a full constellation of 110 satellites operational, potentially increasing to 168 satellites to support 5G connectivity. This strategic scaling will position AST as a key player in the global telecommunications sector, particularly in underserved regions. 2. Market penetration and revenue generation. The demand for mobile data is projected to surge, particularly in developing regions where connectivity is limited. AST SpaceMobile's innovative approach to transforming existing smartphones into satellite phones will facilitate access for the estimated 3.2 billion people currently offline. The company anticipates capturing approximately 1% of a projected $1.1 trillion market by 2027, equating to around $11 billion in revenue. The 50-50 revenue-sharing model with mobile network operators MNOs will allow AST to maintain high profit margins, potentially exceeding 90%. This symbiotic relationship with established telecom companies will accelerate user acquisition and market penetration, particularly in equatorial regions with significant connectivity gaps. 3. Technological advancements and competitive landscape. AST SpaceMobile's technology, which allows direct communication between satellites and unmodified mobile phones, sets it apart from competitors like Lynk and the T-Mobile Starlink partnership. As satellite technology matures, AST will likely enhance its offerings, potentially introducing additional services such as IoT connectivity and emergency communication solutions, further broadening its market appeal. However, the competitive landscape will remain dynamic. T-Mobile's entry into the satellite-to-mobile market could pressure AST's market share, especially in North America. To maintain its competitive edge, AST must prioritize reliability and user experience, ensuring seamless connectivity for customers. 4. Regulatory challenges and opportunities. Navigating the complex regulatory framework will remain a critical challenge for AST SpaceMobile. The company requires FCC approval and must address concerns raised by existing telecommunications companies. However, recent bipartisan support from U.S. senators indicates a favorable regulatory environment for innovative satellite communication solutions. Future regulatory developments will be pivotal in determining the pace at which AST can expand its services. Proactive engagement with regulators and demonstrating compliance with safety and operational standards will be essential for overcoming hurdles. 5. Financial performance and growth projections. Financially, AST SpaceMobile is poised for significant growth. Projections estimate revenues reaching $1 billion by 2024 and potentially exceeding $16 billion by 2030. The company's ability to scale rapidly while managing operational costs will be crucial for achieving these targets. Investors will be closely monitoring key milestones, including successful satellite launches and the achievement of initial commercial revenues. A stable cash flow is expected to enable AST to reduce reliance on external financing, allowing for strategic investments in future satellite deployments and technological enhancements. 6. Long-term industry trends and sustainability. The private satellite constellation market is expected to grow exponentially, driven by increasing demand for global connectivity solutions and advancements in satellite technology. The entry of major players including SpaceX and Amazon's Project Kuiper underscores the market potential. As the industry matures, emphasis on sustainability and environmental responsibility will shape operational practices. AST SpaceMobile could position itself as a leader in sustainable satellite communications by adopting practices that minimize space debris and prioritize efficient resource use. Conclusion: AST SpaceMobile stands at the forefront of a transformative phase in satellite communications. With a strategic focus on deployment, technological innovation, and market expansion, the company is well positioned to capitalize on the growing demand for connectivity. while challenges remain particularly in regulatory navigation and competition. The long-term outlook for AST and the private satellite constellation market is optimistic, suggesting substantial growth and societal impact in the coming years.